Hey, good morning, options traders. Well, I received a really good email from one of the traders in our group asking, what will my delta be at expiration? And I get variations of this question a lot from traders, and he was saying, I've got a 60 delta option, and if the stock goes up 25%, what will my deltas be when we get to expiration? Well, these are actually making it a lot more complicated than they need to be. It's a really easy answer if you understand your expiration graphs, and that at expiration options can only be either in the money or out of the money. So let's take a look. How would you actually figure this out? Well, recall that delta shows how sensitive your options price is to changes in the stock's price. That's really what delta does. Now here's what you have to understand. Prior to expiration, your delta is somewhere between 0 and 1. Now for puts, it's going to be 0 and -1. The negative just means that it's making money if the stock price falls. It's acting like a short stock position. But in terms of the absolute value, it's between 0 and 1. So that means it could be anything. But at expiration, that changes. That's no longer true. When we get to expiration, you are either 0 or you are 1. Now, because these contracts control 100 shares, sometimes you'll hear traders say between 0 and 100. But the big distinction here is that when that expiration bell rings, you're one of two values, 0 or 1. So just to reemphasize there, expiration is a very specific moment in time. We're talking about maybe the final 5 seconds going into that closing bell. You could still close your option, but we're virtually 100% out of time. That's when you want to be looking at your expiration graph, and at that moment, you're one of two values, either 0 or 1. So let's take a look at a $100 call. And you all know the drill by now. This is the strike where we've got our bend. And this is our expiration graph. So notice that over here on the left, we are flat. That's delta 0. And up here, above the strike, we are delta 1. And that's why this blue line sits on a 45-degree angle. It's just showing that you make dollar for dollar as the stock price rises, and you lose dollar for dollar as it falls. So either 0 or 1. But prior to expiration, this is not true. You're going to look more like this, like a curved line. So this might be our risk graph, maybe with 30 days to expiration. And because of that, we can get a variation in our deltas. So let's say that the stock is maybe way out here near 80 prior to expiration. Again, 30 days to expiration. Delta is probably going to be very close to 0. Maybe 5, maybe 10, depending on a number of factors, but it's going to be super low. If the stock creeps up here maybe to 90, still out of the money option, but you might see a 25 delta. It gets up here to at the money, might see a delta of 50. If it crawls up here to 110, we're now in the money, deltas are going to be a lot higher, maybe 75, and only if that option gets really deep in the money prior to expiration. See how that orange line and the blue are running virtually parallel? Almost the same, can't really tell them apart. That's when you're delta 1. Now as time moves, this orange line moves towards the blue because the difference between the orange and the blue line is the time value. It's the extrinsic value. And that's what bleeds away. So maybe let's say 5 days later, 25 days to expiration, we might move from the orange to this gray. We've dipped down a little bit, and that difference is your theta. That's how much we've lost in time decay. Maybe another 5 days later, we move down to this yellow, another 5 days down to this blue, another 5 days down to here. Finally, we're into 10 days, and then finally with 5 days to expiration, just this little bit of time value, only very close to the strike price. But then as you get really super close to that expiration bell, again, maybe let's say the last couple of seconds, that's when you jump to this blue curve. So let's put our current curve back on, and let's see if we can answer the question. Let's say that the stock is up here at 105, and you're wondering, what will my deltas be at expiration? Well, of course, we have to have an assumed stock price. So usually when people make this comment, they're saying assuming the stock price is the same. So if the stock is 105, where are you on the blue curve? See, that orange curve is just going to move in a straight line right down to there, and you are on the delta 1 curve. Now, in his email, he made it more complicated and said, what would happen if the stock price rose 25%? Where would I be? Well, you're still going to be delta 1. Anywhere on this angled blue line, you're delta 1. So, for instance, what if the stock were 100.01? Is that an in-the-money option at expiration? Well, yeah, barely, but it's by a penny. It is an in-the-money option. And so that orange line is moving right there to the delta 1 curve. That will be a delta 1 option at expiration. What if the stock is down here at 95? It's out of the money. If the stock is still at 95 at expiration, what will your delta be? Trace a line from the orange straight down and look where you're lining up. Right at delta 0. And that's because it will be an out of the money option, assuming the stock price stays the same. Now here's maybe a tricky one. What if the stock is right at 100, right at the strike? Well, it's not in the money, technically not out of the money, but it's not in the money, so it would also be delta 0. So when you're talking about options, when you get to expiration, out of the money and at the money really get lumped into one category of might as well be out of the money. So hopefully that helps you to see what's happening. All you have to do is to say, is this option going to be in the money at my hypothetical stock price? If it is, your answer is that option is moving towards delta 1. If your stock price is going to be at the money or out of the money, you are moving toward delta 0. So to answer that question, what will your delta be? Again, in the money option is moving towards delta 1 at expiration. At the money or out of the money are moving towards 0. So it's really just that easy, and it's all done through the power of understanding your profit and loss diagrams. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course, all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.